So I'm super excited to have you back, Miguel. As you know, the conversations we can spend hours and hours on talking about what is it that you do, how that ties into real estate investing and so forth. So I'm super excited to have you back again. Those of you that are on for the first time, thank you so much for joining us, and thank you everybody for being here for another live. With that said, without further ado, let's bring on Migle Dearoka. Migle, thank you again for being here, man.
Dude, thank you guys for having me. I'm super excited. Real quick, if you guys aren't too shy, I would like to invite you guys to turn on your cameras. Just love being able to network with people and see the face to everything. Awesome. Thank you.
Beautiful. I like that.
We got Marie Shell. Is that how you say your name? Are you on a flight right now, or where are you at?
That's awesome.
Just getting
Marie
business
Schley, I'm on
done.
the train.
Oh, okay. There you go. We're getting some business done and some travel. That's awesome. Nice to see you, Laura, Carlos. Nice to see all of you guys. Well,
And again, this is a collaborative event. If you have any questions, drop them in the chat below, and then when appropriate, we'll bring them up. At the end, of course, Miguel will leave some time for a Q&A. So the more questions you have, the better. I mean, this is something that, and I do want to mention, this is not financial advice, guys. This is not financial advice. This is something that, Miguel does for his clients. He also has helped a lot of my clients as well. Ironically, it's something that I've been doing while investing. It's worked for me. And once I saw Miguel do this, I was like, damn, we need to, have you come to the community, connect you with our people, because if it's something that I do and it works for me, I want to share it with everybody. However, I want to emphasize that you really have to be very responsible. It's not something
mhm.
you should do anytime. It's not for everybody. Just be responsible, when doing this. However, if you can do it wisely, it will work. Just like any type of leverage, you just have to be responsible.
Yeah, definitely be smart about it. That's actually one of the slides I'm going to get into just because the last thing we want to do is get somebody, let's say 100K, no interest funding, and then they go out and buy a car or a purse or something dumb with it, right? So we'll kind of actually go over that here on the call as far as kind of like the do's and the don'ts, how to how to limit your risk on this and just use it wisely. Today's topic is creative financing. We're going to be talking about how to leverage 0% interest funding. So, a lot of you guys might be like, what the heck is that? If you've never heard of it, I'll explain exactly what it is, how it works. But the underlying topic of this is how do we get into these real estate deals, or how do we start and scale this business without using any of your own money or as little of your own money as possible? One of the big things that I have found when it comes to starting a business or investing, the biggest number one objection people have is, I just don't have the money to invest in it. I don't have the money to go like study, like, 'cause you want to invest in your knowledge. People just don't have that money, right? And the whole idea of what I'm about to teach you guys here is just the idea of leverage. Like, if we could get the banks to fund us at 0% interest, whether we invest it into ourselves or a property, the whole idea is that asset is going to be able to appreciate cash flow, or you flip it, whatever, and get a return on it to where you can pay back the debt. And now you just keep that asset. It's appreciating, cash flowing, whatever you choose to do with it. Moving on to the next slide, I wanted to go over just two quick little quotes. So number one is, if you have the money to solve a problem, then you don't have a problem. I got this from the book Who Not How. And diving into this a little deeper, basically what we mean here is, right, if you have the money to solve a problem, then you don't have a problem. A lot of people think, I have this problem. If you don't have money, then you have to go learn something, get some high income skills to overcome those problems. But if you're already investing and have capital, why not just hire somebody or get something to be able to fix it for you? Because if you try to solve this problem all on your own, that's just going to open up a whole new can of worms of more challenges that you have to go through. So, idea about this is just delegate or get somebody else to figure it out for you. The other thing too is, the more funding you have, the more opportunities you have. So what I mean by that is, like I said, if you don't have any money, then it's really hard to get any investment opportunity. But if you have savings, you have other assets, you have hard money, 0%, you have all these different buckets of pulling out funding. So when an opportunity hits, you're not just sitting there with your hands in your pocket, not able to invest. So although we're going to be focusing on 0% funding on this, definitely use all the different funding tools you have in your tool belt, just as long as the deal and the investment makes sense. Because the last thing we want to do is be stuck with debt that we can't pay it off, right? So before we kind of go into everything, I wanted to share just a little bit about me. So I've actually been in the funding space for actually coming up on 6 years now. And I actually used to work for one of the largest funding coaching programs here in the US. I was their top sales coach for the last 2 years. I took everything I learned from them, started my own company because I was already doing a lot of the work myself and wanted to build my own brand. So that's what I do now. Um, Collectively, I've raised over 5 million in 0% funding for over across 100 different clients. And just for myself, I've used everything I'm about to teach you guys here, and I've gotten over $360,000 in 0% interest business credit cards just for myself. And I took those funds to later get into fix and flip. So I used to live out in Indianapolis. That's where I was doing my flips. I worked on 8 of those, and then I got into Airbnb arbitrage. So I actually started with Airbnb arbitrage first and then got into fix and flip. So that's my background as far as the funding and the real estate side of things go. And here's kind of the focus of today's agenda. We're going to talk about why 0% funding, what is it? Number two is the different other funding buckets that I mentioned earlier that are in our tool belt. Number three is how we could actually apply this concept of leveraging 0% funding into real estate, different use cases. And then from there, I'll walk you guys through, now that we know how it could relate to real estate and business, how do we actually get this funding? So I'll walk you guys through what that formula looks like. And then from there, I'll walk you through some of the clients that I've had who've used the same exact thing and the type of results they've gotten. And then lastly, we'll go over some free actionable sauce for you guys. I want to make sure, you guys are investing your time, energy, and attention here. So I want to make sure you guys are walking out with something actionable you could do right after this call. So stick to the very end, and take some notes because we're gonna get into it. So boom. So why 0% business credit cards? Number one, this is the cheapest money you're ever gonna get. It's literally 0%. Big note here is it's not 0% forever. So we do want to pay that back within the time frame before the 0% expires. So I'll get into that here in a bit. Number two is most banks offer multiple 0% interest business credit cards. So why is important is if Chase is offering two 0% cards here, Bank of America is offering 3 here, US Bank is offering 2 here, we could just stack a bunch of 0% business credit cards and put that towards our business. And to scale that even further, a cool little hack that a lot of people don't know is if you have multiple LLCs. So I tell my clients all the time, if you have this one LLC, I recommend just starting a second one. It doesn't need to be producing any sort of revenue, just have it so it can collect age. But if you have multiple LLCs, you can apply for the same card more than once. Like I actually I have like I think 4 Wells Fargo 0% business credit cards through the different LLCs I have. So this just gives you more opportunity and more options for on the 0% side. Now, something really, really key here is timing. So 0% cards, they're typically only 0% for 12, sometimes up to 18 months. However, the whole idea of this is if you guys are investing into a flip, you want to make sure whatever you're investing in is going to get that ROI before the 0% expires. Because if it does expire, the new interest rate is your normal credit card interest rate, which would be like 20, 25%. So there is some risk there. But in order for us to limit that risk, is let's say you put this money into a flip, you expected to ROI within 12 months. Let's say it ends up taking 2 years or 3 years. You have the option to be able to extend those 0% terms for multiple years. And the way we do that is by refinancing that 0% credit card debt that expired on 0% and refinancing and doing a 0% balance transfer onto another 0% card. So now you just buy yourself an extra 2, 3, sometimes even 4 years. And I put this note here is with more time with 0%, the less risk you have. Because although if you expected it to ROI within a year, and let's just say it takes a little bit longer, the idea is that assets, that project's going to be complete. It's already appreciated. It's cash flowing. So the more time you have 0% gives you more time to actually get that ROI and not risking having to pay any interest during that time. The last 2 points is with 0% business credit cards, they typically give much higher limits than personal credit cards. Kind of the bank's I reasoning for this is with business credit cards, right? They're assuming it's going into an asset that's going to pay itself off versus personal credit cards. Those are everyday expenses that don't necessarily mean there's going to be an ROI. So they typically give you much higher limits. And then on top of that, you are allowed to max out business credit cards without it affecting your personal credit score utilization. If you start using your personal credit cards for your business expenses, those expenses are going to start racking up, your utilization is going to shoot up, and your score is going to go down. So I always recommend to people don't use your personal for business, stick to business only. Awesome. Now, now I want to talk about the different other funding methods. And again, I'm not talking trash on any of these. I've used every single one of these. But different situations call for different funding strategies. Like I said, the more strategies you have, the more opportunity you're going to be able to get for yourself. So number one, I'm going to go through kind of like the pros and cons for each of these. So you have higher interest loans. You could dip into your savings. You could liquidate your assets and purchase another one, or you could give up equity of the business or the investment. As far as higher interest loans, like the pros for that is let's just talk hard money, right? Typically, a lender is charging anywhere between 12 to 16% and then 2 to 4 points. So the pros of this is they're typically willing to lend out 80 to 90% of the purchase price and rehab, right? So you're able to get a lot more funding up front. The cons with that is the interest rates and the points do start adding up, and the cost to borrow the money is a lot more expensive, obviously, if we're comparing it to 0%. Now, the second thing is savings. This is what most people do, right? They're like, okay, I want to get into real estate. I've been thinking about it for years. I'm just going to save my way to the top. And there's nothing wrong with that. But the problem with this is those years of you spending time saving is just years of you, one, not getting experience, but also two, there's going to be a lot of deals that you wish you could have taken advantage of on, but you couldn't just because you didn't have the money because you were, spending the time saving. Now, the other option is liquidating other assets. So if you already have a home, you might want to purchase an even larger home. But the problem with liquidating another asset, personally for me, I actually invested in Bitcoin when I was like 14 years old. It was like $300 at the time. And had I started liquidating my Bitcoin when I was in college to start these different businesses, I would have only sold it for like 10, 20 grand, but now it's worth 110 grand. And I'm very grateful that I knew about business credit because that's what I was using to invest rather than selling my other assets. And while those other assets are sitting, they're still appreciating, and I could just use my business credit to go use for working capital. So it does have its time and place. Personally, if it's an asset, I want to just leave it there until, if for whatever reason, if I need to liquidate it to pay something off, then that's kind of like the backup. The other option is giving up equity. Personally, this is probably my least favorite one is I don't want to be the one pouring my blood, sweat, and tears into a project. And then somebody just comes in, gives me some cash, and then now I got to give them like 20, 30, 40, 50%, whatever it is. But in some cases, it might be worth it. But I would like to try to keep as much of the pie to myself as possible, unless it makes sense to bring on a partner for something where they're able to do something that I can't do.
Just want to add one thing, Miguel, on here. You bring up a great point for the savings aspect of it. I mean, waiting, saving, there's nothing wrong with it. Like you mentioned, it's great to, try to complement different strategies together, at least get started, right? There's many ways to get started in real estate without even spending money, wholesaling. I know I saw a comment in there, working with seller financing. Those are awesome ways to do it. You just got to get started and take action and then consider the opportunity cost, right? How the
Mhm.
missed opportunity cost of not doing anything. So, nothing wrong with saving. You want to save and you want to be prepared. However, you want to have different strategies to be able to take action once the deal's there, because a good deal is not going to last forever.
Yeah, absolutely. And I think too, like we said, save it, nothing wrong with savings, but it's just like with the opportunity cost, it like realistically, if you're saving, let's say even 50 grand, for most Americans, that's going to take them years. It's not going to take 1 year. It's going to take quite some time. So just like imagine those years of you saving, but not getting any actual experience, getting your skin in the game and just learning by doing, right? So there is a lot of opportunity cost there. Just I think it ends up kind of wasting time. Experience is going to be the number one teacher versus just watching YouTubes all day. You know what I mean? So I appreciate that input. Thank you, Alex. Now that we kind of know the different funding methods, here are the different use cases. And this is actually the biggest one that I find a lot of people needing it for. But a lot of people, right? Let's just take, for example, for like a hard money lender, right? They typically need 10 to 20% down in order for you to even get approved for that lending product. Again, 10 to 20% of like, let's just say $1 million is 100, 200K. People aren't going to have that. Or even or 500K. You're going to need, 50,000 just to get into the deal. A lot of people don't have that. So a lot of people, what they're using the business credit cards for is they'll come in rather than them saving or selling their assets for the down payment. We come in, we get them 50 or 100K or whatever at no interest. They use that as the down payment, and then the hard money lender is going to fund the other 80 to 90% of it. So the cool thing with this is you're literally getting into the deal with no money out of your own pocket. That's freaking awesome. The other thing too is for you fix and flippers out there, a lot of people use it for renovation slash labor and material costs. The other thing is short-term holding costs like utility bills. If you need to promote or put any money into marketing, swipe the card. This also just creates more opportunities to close deals quickly by just kind of using credit as a short-term leverage. And while you're doing that, it keeps your personal credit safe because again, we're not maxing out our personal credit cards to get into these business deals. We're maxing out the business credit cards, which has no effect on your personal utilization. And then lastly, I've kind of touched up on this multiple times just because it's such a huge piece is again, if you have more funding, it just means more opportunities you could take advantage of. So rather than you spending 5 years for your down payment for one deal, right? The hard thing with using your savings is it's like your life savings and you blow through it all in one transaction. And it spent you years to get there. And now you got a property, you got some assets, so you're asset rich, but now you're cash poor and you can't really invest into any more deals until that property flips. But if you have other funding methods like 0%, this will just help you get into multiple deals at once versus having to do one deal, wait for it to flip, then start the next one. We could get into 2, 3 deals at one time. Cool. I'll actually, for the down payment with a credit card, I'll actually get into that here in a second. Thank you for asking. So now that we know the different use cases for 0% into actual real estate investing, again, I told you guys in the beginning, I don't want you guys to use this. Like, please be responsible with this information. Again, like it's not free money. It's debt, but it's the cheapest debt that you're ever going to get. So before you guys even come into this, you need to have a plan of action on how you're actually going to pay it back. I don't want to see you guys driving new cars or going on these lavish vacations and not having an asset to put it in. Because the idea is we're putting into an asset that's going to pay itself off so that the banks buy you an asset that's going to continue appreciating and cash flowing. So, number one, always have a clear plan to pay off the debt before the 0% interest period expires. And here's just a couple of different ways we could do that given the real estate industry. So, if you're doing like a fix and flip or a burr or something, right? You buy the property, it's dilapidated, you use the 0% for the down payment or the renovation and materials, right? That property is going to appreciate. So to pay back the 0% business credit cards, you could always take out a cash out refi or a home equity line of credit to pay back those cards. And now that debt's out of the way. You don't have to worry about it getting expired. The other option is, I mentioned this before, is extend the 0% terms for multiple years. We do that by doing a 0% balance transfer from this card that's expired and moving it on to this new card that has an additional 12 to 18 months. And by that time, the idea is the project's going to be done. It's appreciated cash flow, whatever it did, whatever your strategy is. And now we can pay back the new card. Other option is, again, the property is probably appreciated. It's going to be worth more than what you got it for. So you could always sell the property um, to pay back any debts. And then you obviously get to keep the profits from it. And then the other one is leveraging other assets. So a personal strategy of mine that I've already kind of mentioned, right, is I got into Bitcoin when it was like $300. I've kept it ever since. And I didn't want to sell any of that. Or actually, I did sell some of it before I knew what I do now with 0% funding. But I recommend if you have savings or other assets, put your savings into those assets so it continues to appreciate. I only like to touch that if I've got my back against the wall and I can't pay back debt. Luckily, I've had these different risk and exit strategies to where I've never had to use it. But in the worst case scenario, if you have other assets, just let it continue appreciating it until you get your back against the wall where you're like, okay, cool. I need to actually liquidate some of this to pay off this debt. Because if I don't pay off this debt, I've got all this interest I got to take care of. So those are kind of the different ways of managing the risk and exit strategies. Now, cool. Let's go into the actual 0% funding formula. These are some more of the actionables. So as far as this, I want you guys to imagine, right? Let's just say you guys are the bank underwriters. I'm Migle. I'm coming up to you and I'm asking Carlos. I'm like, hey, Carlos, you work at Chase. I need 100K, no interest, right? For Carlos, if you're the underwriter, the two things you care about most is you're going to be like, hey, do I think Migle's a trustworthy borrower? And number two, do I think what he's investing, his business, do I think it's attractive enough to lend to? Because at the end of the day, they look at your credit and it's not strong. You've already proven that you aren't the most trustworthy borrower. And if your business isn't set up in the proper way to where they feel confident that, hey, if I give Migle 100K, I'm confident that he's going to be able to pay it back from his business. So those are the two main things we want to focus on. And as far as showing the banks that you are a trustworthy borrower, you want to have at least a 700 to 720 credit score. So they don't just look at the credit score, they look at the credit profile. I've worked with people who have like 760 credit scores, but their profile isn't optimized enough and they still get denied or they get only these like 5K credit limits. And as far as an optimized credit profile, this is kind of at a minimum, kind of what you want to have. You want to have at least 3 personal credit cards, and they got to be primary account holders, not authorized users. Authorized users will help, but like they want to see at least 3 that you own, and they want to see relatively high credit limits just because they look at something called comparable credit. So if you go to Chase, ask for 100K, yet you only have one credit card with a $500 limit, you don't look like the most trustworthy borrower to handle that much. So we want to have at least a couple cards with like a 5 to 10K plus limit on each. And you want to keep the utilizations below 30%. If it's below 20%, that's even better. Um, the other thing too is we want to have perfect payment history, or at the very minimum, we don't want to have any new negatives within the last 2 years. Typically, negatives, they stay on your file for 7 years, but lender, or at least the banks on business credit, they more focus on the within the last 2 years. If it's in within the last 2 years, then it does affect your chance of getting approved. But I'll actually, towards the end of this call, I have a bunch of free resources and actionables for you guys. If any of this doesn't, if you guys aren't there for any of this, I'm saving that towards the end, so don't worry. The other option too, or the other thing we need is you need to have an average credit age of 2 years. So if you think about this, right, if you just started building your credit last week, you know, technically you don't have any negatives or maxed out credit cards, but you don't have enough history to show that you're responsible with it. So you want to have the sooner you start with credit, the better, because it's just going to keep developing that age. But there are ways to artificially boost it that I'm going to talk about later here in the slideshow. Last big thing is no more than 3 hard inquiries within the last 6 months. So inquiries, they say on your file for 2 years. You do get a slight ding on the credit every time you get a hard inquiry, but there are ways of getting them removed. But the goal here is no more than 3 hard inquiries within the last 6 months, because if banks see you have more than three, like if you have 4 or 5 or whatever within the last 6 months, to them it just signals that, oh man, Laura's going out here getting funding crazy, just applying everywhere. Like, why would I give her more money if she's already applied for all these other banks? So we want to be tactical where we apply and when we apply. We don't want to just be throwing a bunch of applications at the wall hoping something sticks, because without a proper strategy, then you're just going to get denied. You're going to get low limits, and then your scores are going to go down, and then it'll actually bar us from being able to apply for more funding later down the road. So again, if any of this stuff on the credit profile you guys are struggling with or aren't there yet, let me know. I'll send you those free resources. I'm going to also touch up on it towards the end of this call here. And quick reminder here. So without the other things, like, you could still get denied. So as an example, I had a client who had like an 845 credit score. So like literally 5 points away from a perfect credit score. They spent years building it up because they heard about business credit, but they're like, I'm going to do it on my own, figured it out. And when they went on their first application with Amex, they only got 5K. And that's why they reached out to me, was because they're like, I, I've been building this up for the last year and a half, and I only got 5K. This is kind of disappointing. Obviously, there's something here that I don't know. And that just kind of goes to show you guys, a credit score and credit profile isn't gonna guarantee getting these massive limits. The way I like to think of the credit score and profile and looking like a trustworthy borrower, all it does is just gets your foot in the door with the banks to at least consider you, and that is it. They have no obligation to get you approved for these high limits if you don't know this next part. So this part is, how do we actually show the banks that you're attractive enough to lend to, right? So we kind of boiled it down into 3 key parts. So number one is understanding each bank plays by a different set of rules. Most of them, they have the main rules, and then each bank has different underwriting rules specific to them. So where we come in is we optimize the business profile, and we already know what Chase, US Bank, Truist, whatever bank it is, we already know what their back end bank underwriting requirements are beforehand, before we even ask for any money. And we want to make sure we're checking off each of those boxes before we ask. That way, when we do apply, they see us as a walking green flag versus some red flags on here where they're gonna ding that and take into consideration when they're making their decision. So number one here is make sure we understand what those key underwriting requirements that they care about most. And number two, this is probably one of the big influential parts, is getting access to what's called a senior level VP relationship manager. So a lot of people, when they apply for credit cards, funding, or whatever, what they do is they just simply go on to, let's say, US Bank's website, usbank.com, and they fill out an application. There's nothing wrong with that. However, the problem with this is when you apply online, your application is just simply going through a computer algorithm. The banks don't know about Alex. They don't know his history, his experience, whatever it is. And he doesn't really get an opportunity to make a case on why he deserves 50K versus 5K, right? And that's where these senior level VP relationship managers come in, is when you have access to them, we'll be able to get you connected to them. And essentially, the reason why they're important is they have a lot of influence on the underwriting process. So rather than just applying online where they don't even know you, they don't know the face, it's going through a computer algorithm, the senior level VP relationship manager is going to be like, hey, underwriting team, Murray came in through Migle. He made sure he meets all of our underwriting requirements. He's already sent us a ton of business. You know, she's looking for 50,000. Let's give it to her. So they're essentially kind of like we've gotten our foot in the door with the banks, and they're kind of like the security or the gatekeepers to help guide us into those applications to get us larger limits. And the way relationship managers work is they actually get paid a commission from the banks based off of how much you get approved for. So it's actually in their interest to help you get the maximum limits. However, the only way to work with them is you need to already know this part of the formula. So again, relationship managers, they're gonna help grease the wheels and get you in and out, and just like improve the experience and the results. The last part here is scripts and data points. So with the scripts, there's certain things you want to say, like you don't want to like talk bad about your business, right? You want to shine it in the best light. So we give you guys the exact word for word scripts of kind of here are kind of the different things that banks like to hear to make yourself look less risky. And there's certain ways on how the application they want it set up to where they see your business as lower risk and more confident to actually lend to. So if we combine these three things with an optimized credit profile and score, that's how we're able to get these approved applications. And
I'm gonna jump in also. Don't forgive
yeah,
me,
go ahead.
but as Miguel mentioned, there are some businesses that may not get as much funding as others. There are some business types that may not get funding at all because of the nature of the business. So you really have to know that. Like, I mean, Miguel is very experienced with this. I've personally been doing it for, my businesses and with some of the business partners that I work with, and I've realized, I've learned, and you got to understand what they're looking at, what you want to show them, and how you structure the business. Because especially real estate, if you're just going to go in real estate investing, they're probably going to turn their back on you. It's a higher risk, so there's ways to go about that, and that's why you want to work with someone that's done it, or a professional like Miguel on something like this.
Yeah, thank you. And kind of one of the like other hidden opportunity costs with this is I've worked with people like in this example where I had that client who was like, all right, I've been watching TikToks. I know how to boost my credit. I should get approved. Like I said, it's not that easy, right? There's all these different nuances. And unless if you've been doing this for a couple of years, you'll get it. But if you're new to it, you probably won't. And the hidden opportunity cost here, right, is there isn't an infinite amount of 0% business credit cards, right? So if your goal is to get let's say 100K, but you apply for 25K credit cards, yeah, you got your 100K, but now there's no other cards to apply for. But if we're able to get that same 100K in as little as two, three, let's say four credit cards, you have 15 other credit cards you could apply to later to get 0% to gain more opportunity and continue investing. So we want to make sure this is done right too, just because when you're applying for funding, if you go in and you're just throwing spitballing applications at the wall and they're getting denied left and right, if you go in and apply with a bank that has multiple cards, and let's say you only get approved for 5K on that first round, and you try to apply shortly after for their other cards, odds are those limits are going to be around that same original credit limit because you just showed the banks that your business is already only worth 5K. They aren't really going to make a huge jump to 50K if you showed them you're only worth 5K, right? But on the flip side, if we're getting approved for 50K on one card and we apply for another one with them, odds are that next card is going to be around that same limit. So we do want to make sure it's done right from the beginning. We want to do our due diligence. So yeah, following this whole system that I just kind of walked you guys through is these are just some of the clients. I'm not going to go through every single one, like the backstory, but I got a buddy, Ian. We got him 75K. He went from 3 Airbnb arbitrage units to 9. He was going from 12K. And after 9 units, he was making 50K a month. My buddy Kyle, he was new to fix and flips, but we got him 165K in literally in only 6 weeks. And then he was able to invest into 3 different flips with his partner. And then Nettie, we got her 65K just on one card. Carlos, I don't know if he's in here. He's been to a couple of Alex's in-person meetups. I actually met him at Alex's conference. That was the first time I had met him. And yeah, just absolutely ripped it. Hey, what's up, Carlos? Yeah, dude, this guy's like a walking testimonial, absolute beast. We literally got him like 70, 75K. Literally, the first 65K was like within 2 days. We took a pause on it because he wanted to just look at his options and just research some stuff. And then shortly after, he was like, hey, let's get some more funding. Pulled out the other like 10, 15K like immediately after. So we were able to move fast with him. So super glad you're on the call here, Carlos. Appreciate you. And then Adrian, we got him 100K. At the time, I think he was only like 20 years old. Yeah, this kid was like 20 years old, and by the time he turned 21, we got him 100K in funding. He was JVing on a deal with somebody who was a little bit more experienced, but he took this 100K, went into ground up development, and in this YouTube interview that I was talking to him, now he's getting into his first $1 million deal where he's also still JVing, but he's taking the business credit and the money he got from that first project and dumping it into this $1 million project. So pretty freaking cool that he's just surpassing me super hard in real estate. And I'm like, he's like 8 years younger than me, but I'm super proud of him. Um, but these are just kind of the results that what you could get out of it. Actually, Nettie, they got their first house here up in Riverside, California. So they used 0% for the down payment for that. And she actually just hit me up this week. She got like a tax deed property out in like Michigan with the other money we got her. In total, we got like 170K, which was huge. Cool. Okay. So here's the free sauce that I promised in the beginning. So this is for the people, their credit isn't the best. It still needs to be optimized. So, if you're new to credit or the profile's just thin, here are my recommendations and actually the sequence of order on the way we want to go is we want to, if your profile's thin, start off with a secured credit card. You could have horrible credit and still get approved. Basically, a secured credit card is like a debit credit. It's like a debit card that builds up your credit. And then there's a bunch of the different starter accounts that you could add. Some of them are like 25 bucks, and it'll add like this trade line that will boost your credit on as a credit account. The other thing is using authorized users. So an authorized user basically, let's say, for example, let's say I had really crappy credit and needed some work. And then I know Alex has really solid credit and he has a credit card with 10 years of age, perfect payment history, high credit limits, low utilization. I could hit him up, ask to be added as an authorized user to that credit card. And the beauty of this is there's no risk to him. He could add me as an authorized user, but I don't have to have access to the actual credit card and spend. It's literally just to help me out, and there's no risk to him. So the authorized user hack is really good. Once you have these three, my suggestion is go in with Chase, the Chase Freedom credit card. That's a really great bank that we want to develop a relationship with early on because they're actually one of the more generous banks. They're typically willing to give out up to 150K, 100 to 150K, no doc check, which means they don't ask for bank statements and tax documents. Speaking of which, I forgot to mention that. So with this strategy that I'm talking about here, the beauty of this too is if your credit's optimized, you know what their underwriting teams are looking for, you have the connections, you know what to say, what the applications need to look like, you're able to get approved with what's called a no doc check approval, meaning even if your business is new, even if your personal income's low, you don't even have to have business revenue established yet. Because we did our due diligence in the beginning, you're still able to get approved. So back when I was telling you, I've done like 8 or 7 different Airbnb arbitrage deals. Back then, I was literally I was making like 2K a month living at my parents' house. My business was like a month and a half old. Obviously didn't have any business revenue, right? So for most people, they're like, well, I can't get funded. But because I applied the same strategy, I was able to get approved for a 25 and a 50K card in a matter of weeks. So this really can be the solution for you guys. If you guys have been thinking about real estate or a business investing, whatever it is, could really be the thing that takes you from a 5, 10 year timeline and literally just get you started immediately. So going back to the free sauce, hit up Chase in this order, get Chase, then Amex, and then US Bank. They're a little bit more stingy on their personal credit cards. But the reason why we have this is these are some of the top three banks that we like to hit. There's a ton of other like lower tier or smaller banks that people aren't aware of, but these are great banks to have relationships with, and that's why we like to have them early on. The other big thing is if you guys have negatives, so something like a late payment, collections, whatever it is, I have done a lot of research on Dispute Beast. They're a very reputable company. I don't get any affiliate from this. I push all my clients there just because they're really good. Is disputebeast.com. And the cool thing with them is a lot of credit repair companies, they'll charge like 3, 5 grand up front. And you know, I've heard a lot of horror stories where they just like don't fulfill or provide any service at all. Like their credit's still the same. With the Dispute Beast, they actually offer 110% money back guarantee if they can't get your negatives removed. So they pay you an extra 10% just for wasting your time. And then on top of that, I believe it's only like $50 a month. And the reason why it's so cheap is because they just leverage AI to basically do everything. So they use AI, they use the Fair Credit Reporting Act legal laws, and they tailor it to your credit situation, and they just automatically send out the dispute letters on your behalf. So literally they do the whole process for you. Super cool. The other thing too is if you have low credit age, tradelinegenie.org is really good. So they basically sell authorized user trade lines that have old age. So if you don't have any friends or family members that are willing to give that authorized user to you, you have a paid option right here. And then lastly is if your utilization's just maxed out, there's a couple different ways we could go about it. Is something I recommend to people is if your cards have high utilization and you're paying, let's say, 25% interest, you'd go out, get a personal loan. Let's say it's only charging you 9%, right? Use that personal loan to pay off the personal credit cards debt. You just went down from 25% down to 9%. Authorized users, those will help utilization because you're borrowing basically the credit limit from that card, and that's adding to your total credit limit. So your total authorized or utilization will go down. And then other option too is if you're able to qualify for 0% business credit, just transfer some of the utilization onto this 0% card. So you just went from 25% down to 0%, which is huge. So this one was more so for people where they aren't just quite ready yet. Their profile needs work. This is for the people who are already optimized or close to the finish line. Um, my two tips here is have a funding sequence, right? Again, we're not just throwing applications randomly. We didn't just get an offer in the mail or get hit with an ad and we're going to apply. We want to make sure we're applying in the right sequential order. It all kind of depends on each person's credit situation. Just because if you've already applied for certain places or if you already have existing relationships in certain places, it might make sense to start there. But I like to start with the top national banks first. So what are those? Those are like Chase, US Bank, Amex, Bank of America. Those are probably like the top, and then Wells Fargo. Those are probably the top five names in the game. We want to start there because they will give large limits. And let's just say, you know, you max those cards out and we need to refinance it onto another 0% business credit card. Then we could go to a bank that's more regional, that's more specific to your, the Northwest or the South or the East Coast or whatever, and transfer the balance there. And then there's other banks below them. If we still can't pay it off, we'll transfer the balance to them. But the main thing is, if for whatever reason we're not able to pay that debt off, I would rather ruin my relationship with a bank that I'm probably not even going to use that doesn't give that many good rewards or high limits than somebody like Chase, where I get thousands of dollars of free travel every year. So we want to, again, hedge your risk, have a good funding sequence. Lastly is credit limit transfers. This is absolutely huge because one, Chase, they allow you to transfer limits between LLCs. So again, if you have, let's say, two LLCs, right? Let's say on LLC A, I got 50K. right? I paid it off and then I applied for another 50K using LLCB. I could transfer 40K from this LLC over to this one. So 40 plus 50 is 90K. Now you have 90K at no interest, almost 100K, which is huge. The last thing is Amex. They allow you to transfer personal limits to the business credit card. So let's say you get a 20K personal credit card with Amex, and let's say you get 20K on the business credit card. You could transfer 15K of the personal over to the business. So 20 plus 15 is 35K at no interest. So it's all about playing the game smart. And again, knowing what different banks, what they're willing to do. So again, this is for people who are kind of a little bit more funding ready, but again, make sure you guys have the right plan so we're not just spitballing. And that's basically it. Yeah, for anyone curious, this is basically how our offer is built out is ours comes with 100% guaranteed funding. So we basically, if we don't get you funded, you guys don't pay, right? Doesn't get any better than that. The other thing too is how our system is set up is if you guys are qualified, we'll do a custom credit analysis on all three bureaus. We'll further optimize your credit and build out a funding roadmap of, hey, here's exactly point A, B, C, and D. This is where we're getting the funding. You said you needed 150. Here's how we're going to do it. And we're going to go implement those plans for you. And then lastly, I just mentioned that this is 100% done for you. Or actually, not 100%. I'd say we do about 90% of the work. 10% is on you. So that's as an example, if we're connecting you with a relationship manager, I can't pretend to act like I'm like Nick or something. I'm going to connect you directly to them. I'll let you know, hey, this is kind of what they're looking for. So be prepared. Here are the scripts. Here's what the application needs to look like. So there is a little bit of work on your guys' end, but we handle most of the heavy lifting. But that's for anybody who's interested. That's our done for you business funding offer. We also, I've actually got something special for you guys here on the call. I actually built out a free mini course. It's more focused on how to pre-qualify and get your credit ready. So if it's something you guys are interested in, just give me drop a thumbs up in the chat and I'll send you guys that free mini course. Tons of free value. I touched up on some of it in the free sauce I gave you, but there's a lot more in there. Yeah, guys, that's basically it. I know I've been yapping for yeah, I've been yapping for a bit. So first off, thank you, Alex, for having me. Thank you guys for lending me your attention. I want to open it up for any questions and I'm happy to answer. Um
And thank you for all this information, for your the generosity of your time. Truly appreciate it. And I've seen those that really do it right, take action correctly. It's really helped them out. So it's definitely a great tool, like you said. We do have a question from Eric. You touched on it, but I just want to
yes.
make sure we answer Eric completely. So he is asking, what is the best way to get to know senior level VP relationship managers?
Yeah, so I remember before I was in that phase of going through Instagram, YouTube, and TikTok. I was like, oh, it doesn't look that hard. And I tried getting a relationship manager on my own. And when I went into Chase, they gave me these two things. They were like, in order to get in like connected with a relationship manager, if you want to do it organically, you have to be a business and have a relationship with them for at least 1 to 2 years. And your business needs to already be bringing in 7 figures worth of revenue. Because again, these relationship managers don't want to just work with anyone, especially if they're not qualified, because it's just wasting their time, right? And at the time, I'm still not just there yet at 7 figures. I'm working my way to that top. But that's what they told me. And I was like, oh crap, this, I guess I'm just like out of the running. And then as I kind of invested in this industry, learning more and more on it, I found out if you know somebody who already has those connections and you're able to work your way in and integrate into that, that's how you get those relationship managers. That's personally how I did, is I just had people in this funding industry, and then also other friends were absolutely crushing it in their business and they just made an introduction for me. So that's the artificial way of doing it, is you just got to know somebody. But also, like I said, you don't have you have to know somebody, but you also need to make sure that your profile, credit wise and business wise, match to what they're looking for. Because even if you get connected, but your credit isn't the best, they're still not going to want to work with you. So those are your two options. is either A, already be making $1 million and working with them for 2 years, or B, know somebody who could connect you and just make sure that you're already aligned with what they're kind of looking for because they don't want to waste their time and your buddy doesn't want to put somebody on who's not ready for it because he doesn't want to waste their time either. And then somebody was asking something about what was it? Oh, how do you use a credit card for the down payment? So that's a great question, right? So banks, they do something called a cash advance, right? If you want to take the cash from a credit card, it's going to be like 30%, something ridiculous, right? And we don't want to go that route because imagine investing into your business and you're already 30% down the hole, right? That's horrible business. And unless you're making crazy returns, then good for you, but that sounds very sketchy and high risk for me. There are legitimate companies out there, liquidation companies out there, where essentially they charge a in total it's 6%. So the banks they charge a 3% credit card processing fee, and then the liquidation company charges 3% for the liquidation fee. So that's their services. So in total it's 6% that they charge, right? So you come in, you get it, you get your credit card, let's just say you got 100K, you go through that liquidation company, you're paying 6% on it. Three goes to the bank, three goes to them. That's just how they do business. And yes, there's a cost to pulling the cash out, but I'll take 6% over 30% any day of the week. And essentially what they do is they do their liquidation service. You swipe the credit card and then they transfer the money back to you minus their 6%. And that's how you get the down payment. So when I did my very first fix and flip, I obviously didn't want to sell my crypto to get into it. So what did I do? Is I opened two different credit cards. I went through the liquidation process and then I used that 75K as the down payment to get into my very first fix and flip. And then anybody got any?
Any other questions, guys? If and also don't forget if you want the free course from Migle, just give us a thumbs up in the chat below before we log off. This way we make sure we send that to you. And feel free to bring up any questions. This is the time.
Oh, I see Barabel had asked, what about transfer fees from card to card? Usually a percentage, right? That is correct. So banks, so they have what's called a 0% balance transfer. So there's no interest during the whole time that period is transferred. However, they charge that credit card processing fee, which is just 3%. So something some of you guys might not know is the reason why banks give out credit cards in the first place is they typically charge the merchant 3% for processing it. You guys just never see it because the merchant's the one paying for it, not the consumer. So the same rules apply with a balance transfer is it's 0% interest on the transfer, but to initiate the transfer, you just pay 3% upfront of whatever it is. So again, there's a cost of doing the business. However, I would pay 3% to extend my 0% for another year or two, any day of the week, if it means I'm not having to pay that normal credit card interest rate of like 20 to 25%.
We also have a question that if the this is going to be recorded, obviously it's recorded, we'll upload it on our YouTube channel where you can listen to this live again. You can also listen to a previous live of Miggle. We've had him on our podcast as well, which is all located on the same platform. You can check out other podcast episodes. So I put the link to the YouTube channel in there. Just go to alexnaleonvideo.com. That's our YouTube channel. Please subscribe to support the channel so we can keep, putting time and all this passion into providing you good, helpful content and share it with others. This is what it's all about, is sharing. That's what we're doing here. We want to share this. This is not something that, I'm affiliated with to get something out of Miggle. It's something that I personally do. I apply. It helps me with my business. It contributes to the success of my business, and I just wanna share that with you and then bring them on. So please
Yeah,
go ahead
thank
and
you.
do that. Yeah, for sure.
Alex, I got a question for you. Do we have everyone's like emails or anything that I could get later? I could just send them all the information if we have that.
Absolutely.
Okay, cool, cool. So I see everybody's I'm just gonna take a screenshot of this. Cool. So we got a couple other questions. What's your fee? What is your fee? Okay, cool. So as far as the fee goes, this industry standard is 10% paid on the back end, but we do, depending on which package or pricing structure, we do have ways where it goes down from anywhere between, what is it, 5 to 8%, depending on what makes the most sense for you guys. So the highest you're going to pay is 10%. That's the industry standard for I'd say like 99% of done for you funding companies. But we also wanted to make sure that we're competitive and make sure people are getting as much value from this. So it could get down to as low as like 5 to 8%, depending on how we structure the deal. So again, there's a cost of doing business, but again, as long as your business is making more than 10%, 15%, this could be very helpful for you guys. I don't know many lending products that will lend you on a business that's new or pre-revenue. So this could be a big opportunity for anyone here who's just starting out, or even if you have a business, just help scale it. So 10% of what is the amount funded, correct?
Yeah.
So let's say we get you 50K, we would take 5K of that. But again, like we have options to bring that price down as well. Yeah, thank you guys for hopping on. I'll
And I
get
believe you mentioned that if you don't get them the funding, they don't pay, right?
exactly, exactly. So the way it's structured is we have an offer where we actually allow you guys to buy down the rate. So we do require a down payment up front, but in any case, if you're like, oh man, I went to Migle's call, he sucks, didn't get me funded, or for whatever reason it is, it's in our agreement where, hey, if we don't get you funded or we don't pull up on our end of the bargain, then without question, we're just going to refund you back the down payment or the difference of whatever we got you. So we want to make these deals as low risk as possible, but we know the second we get you guys in here, it's going to be golden. So
And if you guys have questions, you want to chat about this, with me being that I've done this, I've used it, how, the pros and cons, feel free to reach out. I would love to share, my experience with it. And Miguel, again, thank you so much. We have his information up here. If you guys want to take that down, appreciate you coming on, man. We know he'll be back on again. It's a topic that's very much in demand from our community, so we'll definitely have him back on. So stay tuned for that. Also, would love to see you guys in person if you're in the LA area. Like I said, check out our events. Otherwise, we'll see you on the next live next month. Thank you all.
awesome.
Have a
Cool.
good day.
Alex, quick
Yeah,
question. Is there a way I could get the information from the meeting chat as well?
100%. Yeah,
Okay, awesome. Well, heck yeah. Thank you guys again for lending me your eyes, ears, and attention. I really hope that this was valuable for you guys. Thank you to Alex for building out this awesome community. Like, you guys, this guy's an absolute savage in this. Like, I've sent him they didn't even like buy from him or anything, but I just sent him people who were interested in learning, and he just like helped them out to the fullest. And it's awesome to be able to connect with people who actually are really passionate about it. So definitely talk to Alex about his experience. Carlos is in here as well. He's been a past client of mine as well. So if you guys want to hear how it's worked out, or just use cases, or just real estate investing in general, definitely talk to them. They're a huge source of knowledge, and I'm just very blessed and grateful to be here to share with you guys what I'm passionate about, and hopefully it helps you guys out in the long run as well.
awesome. Thank
Awesome.
you. Thank you. Thank you. Appreciate it.